and a very warm welcome to everyone joining us on this wonderful day. To the biggest, most impactful and a truly global FinTech festival, the Sing and World FinTech Festival. I am Amit Sharma, and over the next 5 days, I will have the most thought-provoking and real conversations from FinTech ecosystem in India happening here at Singapore FinTech Festival and World FinTech Festival. The year 2020 has brought with it many surprises and hardships for the entire world. It has been evident throughout the history of human race. We are creative scenarios as and when required. We shall do it again, and we shall overcome obstacles and the difficulties that we have faced in this year. And if you are system in any way and anywhere in this world, this indeed of the year, and this right here is where you belong. And once again, thank you all for joining us today. With that, I would like to introduce of Singapore FinTech Festival and World FinTech Festival's India chapter. Is a dialogue on SME financial inclusion and the measures to control pandemic, including lockdowns, have had an adverse effect on them, creating problems such as being unable to ramp up production, lack of workers, and disrupted supply. And SMEs probably were hit the hardest by the governments, by banks, by businesses to encounter the negative effects, but growth of the SME sector in India over the next few years. Now, as the challenges this presents, we are joined by Mr. Hemant Kshirsagar, leader at Ernst & Young, and Hemant will moderate and guide this dialogue. Hemant, and thank you for being with us.
Thank you for
our next Rishi Gupta, Managing Director and CEO at Fino. To Hemant, over to you, Hemant.
Thank you. In fact, I think you stole some of. Maybe I'll directly jump into the discussion. So as it was highlighted, 20 and we have faced problem everywhere, right? But the thing has been that every time we face a black swan event, that's when humanity jumps up and what would have taken about decades to do, right? From that particular perspective, we wanted to divide the session in multiple parts. And we will start with, first of all, understand MSME has been the impact which you do not see economists talking about, or people who are practitioners can really understand what's happening on the ground. Then we'll switch in that what could digital financial services or FinTech do to make what we have seen is this particular pandemic has undone many years' work by such inclusion that was expected in 2020 by 2030. That means sustainability problem that we have really not cracked. So before we jump into that discussion, what I would like to impact of pandemic that it has had on MSME, and I'm one from the payment side, one from the credit side, and then we have one from export-import. Rishi, what's your view on the impact on MSME of the pandemic?
And you rightly mentioned that what gets covered more is the big media. But let me just share some data, and I'm sure everybody is aware of the real backbone of the country. They contribute, they are more than 6.5% of them are in the rural India, which means that a lot of rural economy from the SME sector, especially in the rural. They employ really 45, they contribute 45% from the SME. So we cannot leave the SME sector, the real economy without the SME become participative. And I think is also inclusion of SMEs, which is in a way the rural people in the lower income category. SME also categorized. The government has been time, roughly 20 to 30% of the package was targeted at the SME sector. And but the real is the fact that the government of India, while they are trying to do many on the equity side, I think the issues with regard to SME and inclusion is deeper. It's not only about the pandemic which has come. Maybe we are fortunate that we are having a discussion today, but the real population at large, in terms of cheaper availability rate, cheaper availability of credit to them, uh, employment value of the employment generation cannot be ruled out from the fact that a lot of the people who are working in the SME sector are largely unorganized sectors which are there. Not the employees who are working in those unorganized sectors. The real problem which we have to solve is solving the problem of the inclusion of the people who are there working in those unorganized sectors. And we have seen that the government has been pushing some of the SMEs and small enterprises to actually pay their employees digitally. But the economy is working on cash to a large extent, because of which the real digitization is not helping or not happening because the employees are getting paid in cash. So I think that is the root problem when we look at digitization for SME sector. But I think post-pandemic, with the focus coming onto employment generation, to taking care of the SMEs towards data and AI ML, and there are a lot of fintechs. I would say the role of fintechs are very, very important in the MSME sector to actually go and target some of those sectors where cash flow based, database kind of lendings can be made available. Just to share, in our own case at Fino, we work a lot on the payment side, and lot of current accounts we have in the SME sector, and also we are working with a lot of people who work in the SME sector. We have started to see that during the pandemic there was a big migration of people moving from urban to rural. That put a lot of pressure on the people, and that is where we saw a big ecosystem of merchant getting added. Merchants are small kirana shops, chemist shops. They are also part of the SME category. And we created job opportunities for nearly 1 lakh people in the last 6 months. And we have a network of 3 lakh plus merchants now who are on our ecosystem. So we were able to create opportunities of 3 to 5,000 rupees of income for them on a monthly basis. So this kind of digital tools and opportunities can really help the SME sector grow post-pandemic. And I would also say that SMEs also have to open themselves. A lot of them are still working in that age-old manner. They have to open themselves to technology, digitization. I think that is where the real growth will happen. Once they start opening up the sector, the fintechs, the banks start opening up, that is when we will see the SME sector really flourish.
A valid point, Rishi. So, if you look at it, Harsh, the MSME credit gap, even before pandemic struck, was pegged at around $330 billion to $400 billion for India. But after that, even pandemic happened, and that in some ways also aggravated the situation, because earlier the supply was the issue, but now looks like the demand itself also got impacted. So, what's your experience as a key MSME fintech lender in the market?
So I totally agree to what Rishi suggested, right? I think we all know how last 8-9 months have been for all of us. In fact, the mid-sized, large-sized corporates as well. I think the small SMEs, like Rishi suggested, have been going through their own turmoil. And I think safety and health of family and well-being of relatives near and dear ones has been the critical one, right, for everyone. So SME, the priority was that, and now slowly as the business moves on, obviously that will be getting back to business, getting back cash flows, taking care of, again, parallelly taking care of families and everyone has going to be the priority. But considering that we are a startup and we are the optimists of the lot, right? and like we discussed, the truth normally doesn't get disclosed in papers or media and everything. I think what we as a team have realized, two aspects to this entire financial inclusion, and I think that might be a few positives that we can take out of this as well. First, realization we as a team had it that if you normally look at disasters, right, natural disasters like a flood or or a cyclone or something like that, that basically uproots the infrastructure and systems of a particular place, right, wherever they happen in a particular town, city, or a country. With this pandemic, I know we all of us feel that we are going through this, but there is a certain timeline that we can still see an end to it. Right? When the infrastructure is uprooted, the roads are uprooted, the shops are uprooted, it does take a lot of time to come back on this. If there is a definite, here at least when the pandemic, when the vaccines start happening, whenever they start happening, there is a visibility that the things can get back to normal. And the loss of infrastructure, financing and everything is still not there, right? So maybe 5 years down the line, will we think too much about it, too deeply about this? Maybe no, right? This will be a blip year for all of us, where our plans all went awry, our focus went awry. But that's it, right? Maybe in 5 years, does it hamper our capability as a nation to become digitized, as a nation to go ahead and forward build our nation and SME inclusion? No, it doesn't help. It doesn't stop us from doing that. Secondly, I think another silver lining that we see is a lot has been told about digitization, level of digitization in the country, acceptance of digital payments, SMEs going digital, financial inclusion and everything, right? What I personally feel, we were normally clubbed in the class that you don't have a particular per capita income to move to the digital levels, right? Like China did or developed economies did and everything. I think this could be a fantastic tipping point for all the digital-led businesses in the country, where the need has come from all the SMEs themselves, right? Suddenly, I come from a typical business family, right? So where all my cousins who work in businesses, who do multiple stuff and everything, right? If you had asked them earlier, the split of their businesses would have been 70-30 in cash and on books and everything like that, right? Now, if you ask them, would they do something like that where they can have another something, they would hesitate to do that, right? The GST numbers are doing good. So I think this could be a tipping point for all of us in building it. And like Rishi said, I think a lot of work will have to happen. But these points do give us encouragement and confidence that maybe we have shifted the linear curve maybe one step ahead because of this pandemic. So that's our learning. Obviously, from our side, in terms of SMEs helping them, so our like for us as a team, the idea was during the first few days of this happening was to take care of two stakeholders. One was our employees and people who are working for us, and second was our existing customers, right? So we started reaching out to them early days, interacted with them, how we could have helped them, insurance and everything for employees, people making work from home. We guided our customers that it's okay if something is happening in your family, don't worry about your EMIs, we will communicate, interact, and give. So all those things happened. I think that's been a gradual progression that we've started seeing little bit business come back to them, their confidence coming back as well. So I think it's another few months before we resume back. But the good part is basically that 6 months, maybe not 6 months, maybe 12 months, 18 months down the line, we can get back to our running speed again. And this could help India become more of a superpower that we are already in payments, since each and every individual who's gone through it realizes that digitization is extremely critical for future.
Yeah, that's what I like about entrepreneur, right? Ever optimists. Whatever happens, we are always optimistic.
Yeah. So even that's our blood DNA, right?
I agree. So Ramesh, one of the side impact, so to say, and I am going to now tread on thin ice with this question, has been that with the lockdown, which was anyways to physical movement, it also seems like countries have started closing up a little bit. So the globalization wave that we had been riding for a very long time, and the world was getting more connected and flatter, as to say, that seems to be getting impacted, disrupting a lot of global value chains. So what has been your experience, what you have seen as part of Exim Bank, the impact that it has had on the global supply chain for MSMEs, and how could we actually help them out? Ramesh, I think we lost you there. We are not able to hear you.
Not audible.
Am I audible?
Yes, Ramesh, please go ahead.
The Bluetooth doesn't work. So this disruption in global value chain didn't happen just after the COVID pandemic took shape. I think it was more the contribution of the policy change of United States with all other nations, the friendly or not so friendly. So it has its beginning, and then the trade wars between China and US intensified so much that people started looking at in different destinations and then change their sourcing to different countries. So that traditional established mechanisms that really got disturbed. But again, I think the breaking point was the COVID pandemic, and whatever supply chains were there, say raw material or to the final product, everything got disrupted. So we have seen that very evidently in the sharp decrease in exports. Of course, much to do it was on the closure of all the facilities, including logistics, schools, everything got closed. Not only in India, but the rest of India, the rest of so, this has been a significant challenge for the banks like us who are focused on supporting export and import business. Of course, there had been a shift in the trends. We are slowly coming back. One sector we have always looked upon as agriculture exports, which has really seen quite a rebound. The bulk of exports happen in India on the oil, lubricant, and crude part. So there, the lag is still there. The gems and jewelry, precious stones, those export and import businesses still subdued. The rest of the sectors are looking up. Pharma is leading the whole band. I think that is one the most promising sector we have seen all through this lockdown period and then post. So all along, this has been a very interesting time for SMEs and the lenders like us who have been supporting this in difficult times. But I would like to mention, I think the government of India has taken really an immediate and responsive measure time to time, and then the latest one is to enhance the ECLGS guidelines and then expand the horizon of the SMEs which are going to be provided. So that way, the importance of SMEs is being recognized by government of India. The way these SMEs contribute to the employment regeneration and then the bringing the workforce into action. So that has been well recognized. I think we need to wait for how the RBI provides us more guidance on how to treat the mess already created and how long we can postpone the NPA classification and all. Much of it depends on the ongoing court in the Supreme Court also. All these things are going to have a lasting impact on the financial institutions who are operating this space, including the banks. It's a space to watch out. Let's see how it goes.
Fantastic. And I think it's a good segue, Harsh, coming back to you. So RBI and government tried infusing and is continuously trying infusing capital into the economy, right? But what I've seen is a lot of that capital has not reached the right places or MSMEs it was supposed to reach. It has got stuck at the top level where the capital was infused. And I have heard a lot of fintechs talking about how, and specifically fintech MSME lenders, of how they can help take that capital and make it reach to the level where it was actually supposed to reach. And I think some of that also has impacted. There are some policy changes. I will not quote. I'll leave it up to you to talk about it. What could fintech lenders do to take that capital and make it reach the MSME sector where it is actually required in today's date?
Correct. So I think, Hemant, we all will have to, and I think we all know that we are a developing economy, right? So the distribution channels per se, either way of money, goods, everything has to develop, right? We just, what we hear and see in news is UK, US, Japan, China, or maybe Russia for that matter, right? They are comparatively, even if you look at China and Russia for that matter, even if they are developing, they are literally far better developed in distribution systems, either for money or of goods and everything. So I think we are going through our turmoil, right? And I think India is as I normally share with the team, we are as a startup as well. As a country also, we are a startup, right? We are pushing hard, we are growing the boundaries for ourselves and everything. But I think the good part was government and RBI they came up with a lot of suggestions during this time, a lot of policies happened during this time. But I think, what we lacked in some aspects was full and clear transparency on how those aspects were supposed to work, how those schemes were supposed to work and everything. And second, maybe the distribution was not as per or up to the optimum level that we should have all done. And it was a kind of a work in progress. I'm sure a lot of our institutions are also going through this kind of pandemic for the first time, right? So the try and working has been there from our side. I think maybe, like you suggested, yes, we've had made recommendations from our side to the government and regulator that the fintechs can play a larger role, right? What happens is SMEs for the longest time did not have access to capital, and we are a capital-starved country, right? So we have a stack of people who are far better than SMEs, who can take money, pay you back, and they also need money, right? Whether it be housing loan, home loan, auto loans, and everything. Similarly, corporates, mid-sized corporates. So everybody needs money, and then the inclusion doesn't happen. But now with data being easily accessible about SMEs, they being internet connected, device problems also, right? Because we, like a developed economy, we don't have hardware easily available with us, like desktop, laptop, scanner, small businesses, right? But that's getting massively solved by mobile phones as well, right? So now with this infrastructure available, there are chances of better distribution of money, policies, and everything. So I think that's work is already going on. Like I'll give you a simple example. Even last year, like CGT SME scheme, right? Per se, the credit guarantee scheme by central government, right? A sovereign guarantee on your portfolio for SMEs was exposed or was allowed to NBFCs and FinTechs as well. That was a great step towards the government. But I think on the flip side of it, the transfer of money, right? The EMI moratoriums that was allowed. Similarly, the restructuring that's allowed, right? Basically, that does not translate. So if FinTech lenders want to do that restructuring and everything, but if the money they borrow from their lenders doesn't allow that, right? Or something like that, it's going to be difficult. So I think it's all work in progress. Some policies have worked wonderfully well, some haven't. But I think the good part is the dialogue is open on both sides, and people are trying to figure it out, work it out, and make it work.
Makes sense. Rishi, coming to you now, sometimes we keep saying SME, but we forget that the S of the SME in some ways has a different set of requirement and different set of problems and gets left out. And in my work, even across Middle East, what I have experienced, and they call them bakhalas, which are the small pop and pop stores. We have seen a new trend of fintechs and even incumbents coming up with digital solution and increased adoption of digital at that level as well. And we would like to hear your experience on the ground, considering Fino, not only Payments Bank, but the group has a long history of supporting that group and working with them.
Absolutely, Hemant. In fact, we work quite extensively with a lot of those mom and pop shops and a lot of those chemist shops across the country. I would say I would try to break this into two. One is if I look at the cities and the urban, and then we look at the rural side of the country, actually. The rural side is left out from conversations many times, but we are now seeing fintechs getting more and more involved, both on the urban as well as on the rural side. On the urban side, we have seen in our own business, we have seen remittance was the big business for a lot of those mom and pop shops over and above the normal business they used to do. It used to help them get footfalls into the shop. It used to help them get additional income, a higher status in the economy or in the local geography. So a lot of digitization has happened on that side, on the remittance part. So all of them have a mobile connectivity, have a laptop, and they do business through that over and above their normal business. But we are also started to see that a lot of them have started to put QR codes also. So like a chemist shop or somebody who is there, rather than getting a POS machine, some of them who have large businesses have POS machines. So a lot of work has happened on the acquiring side, which in the long run will happen that the data will get generated for some of those customers. That data can be then used for credit, and over a period of time, we can see credit flow improve to those mom and pop shops at an affordable rate. Right now also, we have seen a lot of fintechs and other players giving loans to such companies, but the rates are upwards of 20%. But with this data-driven information which they will have, especially on the urban side, both on the P2M as well as on the banking ecosystem, which some of the merchants are having, that will help the merchants get access to easy and cheaper credit. On the rural side, we have seen, as I mentioned in my opening remarks, we saw a big surge in the number of additions. When we entered the pandemic, we used to do 8 to 9,000 crores of transactions every month. Now we do about 13,000 crores of transactions. So there is nearly a 40 to 50% jump in our transaction volume in the last 6 to 9 months. Our ecosystem has also grown by roughly 40% in the last 9 months. So that is also helping. So on the rural side, we are seeing that this local person who is there in the village or in the town is acting as a banking channel, which we call ABC of banking, which is alternate banking channel. We have seen a change in the consumer behavior. People don't want to travel to branches and ATMs to withdraw money. They are happy to go to the local person whom they trust and withdraw money from there. So what is happening there is that data is also get built up. And that data which is getting built up in terms of the income which he's able to generate and everything is moving through the bank ecosystem will further help him to take credit in future in the rural India also. So a lot of data is being generated. Now we need to put right tools where we can extract that data and make it more sensible and meaningful for some of the fintechs and some of the banks to actually go and fund those merchants. So digital inclusion, financial inclusion of merchant ecosystem has started in the last 5-6 years. It has further got accelerated. To top it all, we are starting to see the change in the consumer behavior to come to those merchants through banking and buying their normal ration and everything else also to do transaction value. So on a run rate basis, now we do about $2.5 billion of transactions we should hit by January of this year.
Awesome, awesome. Now, Harsh, if you look at it with, and Rishi spoke about the alternate data bit with GST coming into picture, and anyways, government also pushing for cash flow based lending. And I think OCEN coming at a time which would not have been more opportune than what we are currently looking at. I wanted to take your views on DREDS, OCEN, and the cash flow based lending the government is trying to push. How do you see that supporting financial inclusion of MSMEs on long term?
No, yeah, correct. So, Hemant, this is all super fantastic, right? If you look at our conventional banking all across, right, what we have done is we've always relied on recovery rate of the asset behind the loan, right? Be the home loan, car loan, gold loan, or SME loan and everything, right? So what has happened is because we are a data-starved also country where SMEs or per se mid-size or large-size cooperatives or individuals were not able to sufficiently provide data. What we would normally as a banking institutions we had to rely on was the recovery rate of the asset behind the loan, right? So actual cash flows of the borrower were not visible, right? Were not visible, not available for institutions to evaluate, right? Now, what's happening with GST coming up with, like I said, right, we now have mobile as the strongest source of hardware. We have people going into vernacular languages and working up, right? We have institutions now digitizing even accounts and khata kind of stuff, right, that we've been doing in the country. Similarly, banking transactions have increased manifold across last few years, right? A lot of SMEs because of GST and other are doing that. So this is all wonderful stuff because these are alternate data, Hemant, that can help solve the credit needs of the country, right? DREDS represent an excellent platform where SMEs can list their receivables, right, of small and large corporates and set up and get cash quickly. And basically, the institutions also get good credit. Similarly, for OCEN, right, OCEN basically is for very small vendors and institutions where still there is a high chance that digital is reaching and payments platforms are reaching, but the financial inclusion or credit needs are not reaching, right? And OCEN again is a platform where smaller transactions, right, even 10, 20, 30,000 kind of loans and everything, 4,000, 5,000 are making worthy, right? So what's been happening per se here is one of the current restrictions that Hemant we had in delivering small loans was overheads, right, for all of us.
Right.
And these platforms, and similarly like for cash flow back lending, Hemant, touchwood, we've been doing that for 6 years now, right? Yeah. We've not taken financial statements, tax records for our borrowers, and we've been building entire cash flow back system, which we've always believed was far more prudent, far more worthy of giving smaller loans to SMEs, right? And which actually, if you rightfully build it, can tell you everything about the equity that he has built in the business, how he operates his business, operating cycles and everything, right? And give him extension of cash. So I think these are wonderful things. Along with these credit essentially, Hemant, one of the major disruptions that's happening in the country is, and which we normally lose out on, is the origination part of it, right? Earlier, it used to be a branch and spoke kind of model, right, for a lot of institutions. But now, because of digital coming in, a lot of these people can access digitally as well, right? A lot of these platforms and take money, which is also changing the face of FinTech in the country per se, right? Because when we talk about small businesses per se, these are people like less than 10 people employed. Most of the family members are employed. This guy is running either a shop or a small manufacturing platform. He does not have time, right, to prepare the documents, go ahead, submit it to a bank, branch or something like that. It gets difficult, right? So along with credit platforms, one of the biggest change and drivers in the country is digital access or digital origination as well, right? You can sit at the comfort of your home in evening or nights, post your day's hard work, reach out to these platforms or reach out to larger banks as well, online, submit documents, apply and everything, and get answers on the communication of your home, right? Basically. So all these platforms, along with credit underwriting and everything, I think origination is the next big thing that we all as a country are building, which will change the fintech face of fintech in the country.
Makes sense, Harsh. Ramesh, whenever you build a tool, it has two faces, right? It is going to be advantageous in many ways, but it may have a dark side to it always. Now, as Harsh and Rishi pointed out, that we are moving to a world which is more digital. People are accessing services digitally, and the lending or even the services will be based on alternate data that is being generated. So I had a question of you, breaking it down into two parts. One, is there a risk that people, it in fact leads to increasing people getting left out because maybe they do not have access to digital tools? And the second is, by using the cash flow data or alternate data, will it not lead to some biases, which again may result in some people getting left out? Of course, it advantages to majority, but may get a disadvantage or short end of the rope to few people. What's your view on that?
Yeah. Just before I come to these 2 points, let's look at a small part of data. The SME segment we are looking at is nearly 50% of rural areas. And the current lending to these SMEs are largely driven by public sector banks. If I just quote the numbers, it's around 61% in the micro segment, around 47% in the small one, about 50% in the medium segment. So even in the current space where with all this, liberalized way of lending with Mudra, Jandan, with all these things, there is still a significant stress on the PSBs to lend to the SMEs. That's where we would like, the banking segment as well as the government, everyone would like the digital lending platform to come in a big way, and they operate and offer a more competitive, loans to this particular SMEs. Now, the important point, as you mentioned, more the digital ecosystem develops, is there a possibility of being left out? It is quite contrary, I would say. I would give a simple example. Most of all our children are going through the online classes. It is true even for the government schools also. Even in the age level, although the same level of engagement may not be there with the rural segment, rural schools, but they are still connected. I doubt there is any child, and I doubt there is no village with 4G network. So to that way, the digital divide is taken care by with respect to the reach of the digital network up to that point. Now the second point is the literacy part of it, which Harsh was mentioning. People have learned how to use this. Not that it has to be instantaneous. I will do it at my leisure. And most of our, we may say this, SMEs are being run by maybe a 10th class person or a 4th class person, but they are still able to generate invoices through a tally software or their own custom made. So there is not a great learning curve for them also to adapt. So I personally feel, and then with the experience, there's a very little chance of any SME entrepreneur being out of the digital evolution. Now, the cash flow based data are the biases which may arise out of this the move to the digital segment. I think it is going to be much better for the SMEs, because at this point of time, say the traditional lenders, we can need structured set of documents to appraise the loan. And the cost of compliance or even providing the document is prohibitive, and that is what is putting off every probable or a prospective loan seeker. So if we make things more simpler, I think it's going to be much better when government is coming up with a guarantee sort of a structure. Instead of providing upfront subsidy or a grant, so there is a guarantee structure which is being played out in 2-3 different schemes. I think this is getting really an evolving situation, and I think that cash flow based appraisal would be a far better tool than to go in for a full-scale appraiser of a loan portfolio. I think these two are rather very apprehensive at this point of time. I think going forward, we will be able to overcome those biases and then be very successful in lending this. In fact, I would even see many of our traditional banks also spinning off a separate entity to look at this particular way of lending as well. That effort will be sooner or later.
Hemant, just to add to what Ramesh was saying, I personally echo what he's saying. Also to top it, see, sometimes we get too bogged down by adoption of digitization at a very, very fast pace. India is 1.3 billion people, and there are 6.5 crore and maybe more SMEs, and 50% of them are in rural. So, and India is being a very, very cash dominant economy. So when we look at digitization, we assume that everything is digitized, all the money is in the bank and everything is routed through the bank and money is from supplier to vendor to demand, supply, everything digitized. That's not the truth. And it's not going to change overnight. It will take its own time. So the model for India, and that is something which we have been propagating, is a phygital model. Physical, assisted, then digital. I think India is right now moving away from a physical model to assisted model. So if some fintechs and some companies like ours was actually helping people at individual level, and I would urge fintechs to look at assisted model to help the SMEs. Exactly what Ramesh is saying. If somebody can help them and make super easy solutions and tools in which they can start and they can be helped to use that tools, over a period of time, they will become digital. It's not going to, there is no magic wand. It's not about data. It's not about, it is also about the fact that there is a tax and income tax issues on data and everything else which is there. But as GST network, as other alternate data is getting coming together, and the OKIN platform and other platforms will help all the data come into one ecosystem, we'll definitely see a big push in digitization. But we are a firm believer that the choice should be left to the customer in terms of how do he wants to access the system, whether physically or digitally or assisted. So that's where the phygital model seems to be the right appropriate model for India. And digitization will happen, whether it is for SMEs, whether it's individual, just a matter of time. And we should give people the comfort to come into this platform at their own convenience. I think that's what Ramesh is also talking about. And I 100% echo what sentiments Ramesh was mentioning.
I would just add into.
Go ahead, Ramesh.
Sorry, Hemant. Just two instances. I think the best case studies in our front is the UPI, which are QR code based, and the FASTag. Kind of adoption of these two technologies is phenomenal, and everybody got onto it within no time. I think the ease of doing it and the adoption and the compulsion to do it will drive all these things.
Yeah, that makes sense. Rishi, another question I have is when you talk about financial inclusion, and this is being spoken about for a very, very long time, and globally efforts were being made. But what was never thought about, and I think Nassim Taleb would be very happy about it in a very, very sadistic way, that people never expected a black swan event like this to happen, and people and efforts of tens of years, decades of years, which was put into pulling people into the wraps of inclusion, were again left out. And that brings into the focus the point of sustainability of that financial inclusion, the resilience of the MSME that needs to be built as part of the financial inclusion. I want to draw your inputs and views on it, and how can we do it?
As I mentioned earlier, Hemant, we are seeing a change in the consumer behavior, and it is said that if a particular pattern continues for more than 6 months, it becomes a habit. So we are starting to see that the people who started to come to our merchant network have continued to stay with us. So we saw a big surge in our transactions volume. It went up by more than 30-40% in the month of April to June, when the government announced all the monies into the PMJDY accounts, and we have one of the largest network in the country. We got benefited because of that money which started to flow into the accounts of the people. We have continued to see that numbers continue. So we are starting to see that people who used to come earlier because of the government money have continued to come to us, and move away from branches and ATM and use our network to do transactions. So personally, I believe that this pandemic has systematically changed the consumer mind, and consumers are more acceptable, whether if it is for urban locations to pay through UPI or pay through wallets or pay digitally. In rural, we have started to see people who are handling cash and who want to get assisted service come to merchant. So the ABC of banking, which is the alternate banking channels, are gaining strength and will continue to gain strength. And over a period of time, we will see a bigger adoption of people into this category. So I believe SMEs who have benefited, who were who were at the cusp of adoption of digital, will be the first beneficiaries of this post-pandemic world. Like we say, we are the beneficiaries of the globalization. When we entered our job markets or started our businesses, globalization had just started. In post middle of 90s, when the entire privatization of banks started, and post globalization of 92, 93. So that beneficiaries were the banks. Now I would say some of the people in the SME world and on the individuals who have been the early adopters of digital will be the first ones to be the beneficiaries, and they will continue. I don't see this going to reverse now.
Makes sense. Makes sense. Harsh, you have been very, very active as part of the overall ecosystem as well in engaging with the government and the regulator and providing recommendation or requests of policy changes or maybe regulatory changes in the framework that could be brought in that will help you and the entire community, the fintech community, to support the MSME financial inclusion. So we would like to understand few of those suggestions and recommendations that you are in discussion with, so that we also get a view of what are the changes required from policy framework point of view.
Correct. No, I think, yeah, sure, Hemant. So what's been happening, Hemant, is like we discussed, right? Again, if you look at financial inclusion and lending per se, right, it's a simple three-step process, like origination, evaluation, delivery, and collections, right? And we need to digitize all these three per se. So what happens is, if you look at credit, access to data, right, like cash flow data, banking data, similarly GST data or ITR data, these are all government, like the financial institutions, either banks can share it with us or the government institutions can share it with us. If that data becomes accessible, right, for people and for financing institutions or fintech, it will make a life lot easier for all of us, right? Because currently also, if you look at getting a GST data, you have to go to a third-party vendor, basically OTP, mobile number registered, Aadhaar registered, and multiple stuff has to happen. Similarly, account aggregator as a platform was a fantastic idea, right? Comparatively, if you look at developed economies as well, there have been private institutions who have been doing it. But it has taken a lot of time to bring it to a stage. But now it's going forward, right? Similarly, in terms of delivery, if you look at it, right, e-sign, e-KYC, e-NAT per se, right, they took a little bit of setback because of Supreme Court judgment on data and everything. But now it's coming back again in use and everything. Similarly, for origination as well, if we can have rightful platforms, if we can have rightful connect with the borrowers, and like for KYC, like original, seen and verified and stuff like that, if digital KYC is done, CKYC is done, and all those things. So we work on all these areas in terms of data, in terms of KYC, AML guidelines, in terms of regulators. So we've been making multiple recommendations so that whenever we say, what happens, Hemant, is still the entire time is digitized, right? Or entire funnel is digitized, right? The digital actually doesn't happen. And like Rishi said, currently it's going on a phygital, right? But phygital also will have its own scale limitations, because one of the things that will all walk down is hardware costs, right? If I have to
Sorry to interrupt, Mr. Lunia. Moving on with the time, because we have a very action-packed day today. To interrupt you guys on that. This is a wonderful conversation that was going on here. And thank you all for joining us here today. I hope to see you again very soon. So thank you very much for your wonderful insights on the session.